as well. So all of that perhaps will take the markets higher this morning. Well, there's the first take on the Nifty, hanging on to 19,500, up about 50 points on the index. Good opening for the Sensex as well, 170 points higher for the Sensex, while the mid-cap index is up about 115 odd points. What's leading from the front this morning is ITC, up about 0.8%, followed by ONGC, JSW Steel and Titan. Banks are actually doing well. The Bank Nifty is up about 120 points. Kotak Mahindra Bank, ICICI Bank are in the green. HUL, Sun Pharma and Axis Bank are also holding up quite well. On the downside, though, you have something like M&M that's just coming in for a bit of profit taking. Remember, it's had a really smooth run. Last 1 year, it's up, since the start of the year, it's up 25%. And then Maruti Suzuki, HCL Tech. In fact, HCL Tech ahead of its numbers is a bit sluggish, so do keep an eye out on that. TCS as well is not doing too much ahead of its numbers, just flat at the moment. And Bharti Airtel is just a tad bit in the red. Suffice to say, it's a good start to the market. The Nifty is up about 50 odd points. The advanced decline ratio is solid. So, that's what's, the market breadth is looking very good at the moment. Let's see if we can build on to that.
Well, that's right. But the stock of the morning has to be these online gaming companies. Nazara Tech, as we pointed out, they said that it's limited to just 5%. The impact of this GST at 28% is impacting only 5% of their business. But they had plans to expand in this particular vertical, which will now get hampered. Stock is down closer on 7.5% to kickstart trade. Delta Corp, that one's locked in lower circuit, down closer around 10% odd. The viability of the business itself is being challenged. We'll have to wait for the management clarification, if any at all. But for the time being, with what we have on the table, it's a clear negative to them. And probably one of the worst case outcomes that could have been expected have come out. This is as of now. We'll have to see how they move around with things. For the time being, it's down closer around 10%. Pidilite as well, you had a brokerage note that was a little bit cautious on their high valuations. Well, that stock's down closer around 3% odd. On the flip side, PVR, Inox, they are happy. The GST, they were expecting to be maintained at around 5%. So not getting into any regulatory tussles and the like. Good news for them. It's up closer around 3%. A couple of other names that are moving well. Lupin, in the final few minutes of trade, you had a bit of a booster shot coming in for their Pitam per unit. That's opened with a gain of closer around 2%. And Ashok Leyland as well. The stock is up closer around 1.5%. Well, you look at the headline index. Yet again, we almost went to around 19,500, almost kissed that mark. But it seems that the bears are coming in to defend that 19,500, 19,525, as we've seen in the last few sessions. So, what else?
Well, you said it, Nigel. I'm also watching out for exactly that. The fact that we started, with some momentum, but already it's more caution than momentum right now on the screen. Reliance is flip-flopping around the red line. They're selling in pharma early on in the morning. Divi's is down, Cipla, Dr. Reddy's, the stock's under pressure. Tech is very soft as we begin the day. Infosys is down about 0.3%. And banks are okay, but IndusInd is the one that's down about 1.5%. Just some more names on the mid-cap screen, because mid-caps are relatively sort of outperforming. So there's a Shoka Buildcon, there's some gains there. Varun Beverages is trying to, knock up some gains. HOEC is up about 3% odd. Tatva Chintan, which is looking to raise some funds, about 2.5% up there as well. But otherwise, it is fairly quiet in the mid-cap market. Masgaon Dock, this stock I think is in a different orbit. It lives on an alternate planet. In a market that's slightly dullish as we start the day, Masgaon is up 5%. Yesterday's mover, Kalyan Jewellers. Ever since Kalyan came out with their quarterly update saying that India jewelry business has grown 34%, the market just can't get enough of it. At least this one. And there's a downgrade, by the way, on Titan. Double downgrades on Titan. Seems people are shifting some of that money to Kalyan.
And, I just want to point out one more pocket that's doing really well over the last many days is tires. And today, the day belongs to CEAT, up almost about 3% odd right now. And it's been a gain of 55% this year for CEAT. Now, not only have the earnings picked up in terms of revenue growth, but the raw material basket has come off significantly. So that's aiding the margins. We saw it in the Q4 performance for CEAT as well, and a couple of other tire stocks. And looks like even Q1 is expected to be quite solid for them. But let's pose all of these questions to Mahesh Patil, the CIO at Aditya Birla Sun Life AMC, who joins us now as a market master for the day. Thanks a lot for joining in, Mahesh. Appreciate your thoughts here on CNBC TV18. Do you think this is a market that has played out in terms of the upside, or is there a lot more to go? And how are you approaching it now, sector-wise?
Yeah, good morning. So, recent rally, what we have seen in the market has probably meant that the markets are looking a bit toppish from a near-term perspective. But really, if you drill down and look at fundamentally, the markets have actually gone on the back of fairly decent earnings growth, what we have seen, okay, last year as well as forecasted for this year. So overall, on the valuation front, if you look at for the Nifty earnings, then Nifty is probably a tad higher than the long-term average. It's not as expensive as probably it was, say, 1.5 years back when the markets peaked out earlier. And even the outlook going forward, if you look at both our, GDP growth numbers have been upgraded than what we were looking at, say, around 3 to 6 months back. And even corporate earnings growth also looks to be fairly strong and resilient, even in FY24. We are looking at around 16% kind of a Nifty earnings growth, which is fairly strong. So I think while near term, because of the liquidity rally, what we are seeing, strong FII flows, markets have run up quite sharply. Might be some consolidation. There could be some probably pullback also, depending on global cues. But I think markets looking at a medium term, I think should scale higher depending on the strong earnings growth. And again, it has been driven by across sectors, right? It's not like one or two sectors. If you see banking sector reporting fairly decent numbers, NBFC is also showing good numbers now because the margin pressure which is there will ease off from this quarter onwards. Sectors like, say, FMCG, while the volume growth is still a tad lower, but margin improvement because of lower commodity prices should be good. Auto sector is seeing good numbers. Industrial, capital good, real estate. It's across more broad-based. And that's the reason why I think it gives a lot of comfort in this rally.
Hi, Mahesh. Good morning. Thanks so much for joining in. Mahesh, what about the broader markets? The headline index could consolidate. Maybe you see a couple of percentage point move either which direction. But the real party has been in the broader markets. Do you see some signs of frothiness out there? Or do you believe there is still plenty of scope out there after the big underperformance we saw in the previous few months or previous couple of years for the mid-cap and small-cap indices?
Yeah, so you're right. I think the broader market has been fairly strong, and there are two reasons for that. One is we've seen good inflows even in the mutual fund side. The last 6 months, if you look at the large amount of inflows have actually come in the mid-cap, small-cap, or large and mid-cap funds. So clearly that has compared to, say, the large-cap category. And even from the FII flows also recently, what we've seen is that, I mean, earlier a lot of FII money was coming in through the ETF route, but now the recent flows have been more India-specific, and that has meant that we've seen money coming into the mid-cap space. And that has led to the kind of outperformance what we've seen in the last 3 months or so. So, but again, I think, I mean, you're right. I think especially the small-cap segment had underperformed in the last 5 years. So I think it's doing some kind of a catch-up over there. But I think from a near-term perspective, I think the valuations there are also fairly priced. I think some of the stocks have seen a lot of exuberance and probably could be still expensive. But I think if the earnings growth in these sectors, especially mid-cap and small-cap, continues to be strong, I think then I think there is enough bottom-up opportunities which will be there. And since a lot of these mid-cap and small-cap companies are more domestic focused, right, are not necessarily dependent on global growth. I think that's where I think we are. One is most positive on, and I think given that, I think from a say 3-year perspective, I think mid cap and small cap also look good even from these levels. Though I think seeing the recent rally, I think there could be some. If there is a volatility, in the global market, you might see some kind of a profit booking here in this small cap space.
Okay, small caps are really the headlines, aren't they? Mahesh, hi. Good morning. So Ribi here. We've all been tracking the numbers, right? Hefty inflows into small cap funds, and several funds actually shutting lump sum investments as well. Yesterday we were talking with the fund managers at Tata AMC because they are one of the AMCs that have decided to stop taking lump sum flows. But you tell us, I mean, when you or some of your peer fund managers look at the small cap basket right now, given this gush of money that's coming in, so you have to deploy it, you're looking at the universe of stocks available. I mean, is it still a comfortable situation to be in? Are you still getting decent ideas at a reasonable price? Or is the going getting a little tough now in small caps?
That's I think the small cap and the mid cap space, right? I mean, depending on the scale and size of the fund, I think, increasingly it's slightly tough because the liquidity in this segment is not as great, right? So while there are always pockets of opportunity which are there because especially in the small cap sector, segment is as much wider. It's not necessarily 200 companies. Even if we can go down the market cap over there, and there are bottom up opportunities which one needs to scout for. But I think one needs to then look at beyond the normal coverage which one would have. But I would say that again, the good thing is that there are a lot of new companies also which are coming in either through the IPO markets, okay, which are providing opportunities to deploy, and we are also seeing some kind of sell down, okay, especially in the mid caps space by the private equity fund, which is providing liquidity in case one needs to build exposure in some of these names. So while it is a bit tough, but I think if you're really looking around, hunting and going beyond the obvious companies, I think there are still pockets of opportunities there for the small cap, and that's an endeavor which, okay, we continue looking at for new ideas, okay, for our portfolios.
Okay, for now, actually, the market, the Bank Nifty has slipped into the red. So, well, it doesn't look like, the market is in any mood to take the levels higher. Perhaps because there are so many cues to reckon with, there are IT earnings as well. In case any shocker comes from there, then the market, doesn't want to be positioned at the top. Well, in terms of individual stocks, just wanted to point out that even though the market is very flat, there are individual stocks sitting at fresh highs. Reliance is once again at a fresh high, so don't lose sight of that. 27.80 on Reliance. Lupin, Sun Pharma are at fresh 52-week highs. Interglobe Aviation is flying high as well. Just had to say that. 35% higher this year. Mahesh, what do you do with some of these leaders of the market? Reliance has been doing really well. Auto stocks, Tata Motors, Bajaj Auto have been hitting new highs. Do you continue to back the leaders, or now do you think the time has come to sort of take profits here?
Yeah, so it's a tough call because short-term rally, okay, stocks might look fairly priced depending on near-term earnings, but I think we normally look at companies, the outlook is good, right? Because companies tend to surprise. I think in this market, what we've seen that initially we came in from a very slow growth. So expectations have been slightly lower. And few sectors, companies continue to outperform. While we've seen some kind of disappointments in the consumer discretionary side, so I think one has to really look at not just the valuations, okay, while they are important, but also the outlook. Because when we buy into a company, we are not really buying it for the next 1 year, but slightly longer period of time. So I think companies which are continuing to outperform, where the outlook is good, and probably some surprises which could come in, positive surprises, one is okay to one would continue to hold on to it. Obviously, what we do is that in our portfolios, okay, if the stock does exceedingly well in the short term and allocation there goes above particular, we take some gains over there, but we'll still continue to be there with the performing stocks. That's what is a we will take, because I think the market is likely to be, while we're seeing a rally across, it's still going to be a discerning market, right? Companies which disappoint in the quarterly, I think they will also see those companies getting knocked down. And whereas a positive surprise, market will probably reward them disproportionately on the upside. So one has to keep that in mind, okay, when we're looking at the price points.
The one space, actually two spaces, Mahesh, in the mid-cap market that have seen an incessant move, literally. One is obviously defense, and we all know what's happened to stock prices there. The smallest of companies to the largest of companies. And the other is this electronic manufacturing, space. Where again the new list, look at Cyient, DLM even again today, or these smaller names like Keynes and Sirma, etc. What is your approach to these? Because I think fundamentally no one's disagreeing on the street about the opportunity, but it's a question of the kind of companies you want to back and at what price. So what's your view?
Yeah, so both these sectors, the defense and the EMS space, the narrative there is fairly good, outlook is good. And that's seen the reason why we've seen the stocks doing well. But I think sometimes the run-up what we've seen in this sector is slightly unnerving over there, because while the outlook is good, I think very difficult to really predict beyond a couple of years in terms of how the numbers will pan out. So market is, I think, discounting too much over here into the future. And that brings some kind of a caution, okay, in some of the stocks in this sector. So we would be a bit cautious over here. I think some of the valuations there are much above than our comfort zone, and we would we would not chase some of these stocks at these levels.
Mahesh, you briefly mentioned IT, but how would you approach the stocks from here on? The next 1 or 2 quarters, unlikely to see any kind of positive surprise. But do you think from, if you have a longer time horizon, maybe some of this bad news could be a good entry opportunity, or would you just stay away? Because recession is still in the offing in the United States. Maybe the second half of the year could be worse. Your view on these stocks?
Yeah, so the IT sector, if you look at it, has been the most talked about sector, right? I mean, a lot of information flow is over there, and markets tends to react even in slight upgrade or downgrade, okay, in terms of earnings outlook over there. I would guess that I think this quarter would be a quarter where you will see, the last leg of downgrades which could happen to this sector. I think it will factor in the whatever slowdown, okay, one is expecting because of the slowdown in the US. What has happened is that the US recession or the slowdown has also got pushed back a bit, right, by a couple of quarters, I would say. So in that scenario, I think you're right. I think there will not be immediate upside in the sector in terms of outlook, because unless we hit that bottom over there, market will still be skeptical. But I would say for most practical purpose, I think the concerns in the sector are now getting priced in. I think after this quarter, probably it will get fully priced in. And I think that could be a good time to really look at this sector. We have been underweight on the IT sector, but we think that it's now time to really look at it more objectively and constructively and build exposure in this correction, because we believe that again, in this IT sector also, I think you will see few companies, there will be a wide range in terms of growth. I mean, some companies will grow at around full year around 13-14%, others will grow at in the low single digits. So I think stock selection also will be important over here in this period. But I think the whole digital story and digital transformation, I think, is a still medium to long-term story. And I think that will continue to drive decent earnings growth after this year of consolidation. So I think this period is a good time to build exposure in the IT sector, and all these companies are now giving good dividend yield also, right? Because of the strong cash flow, so that also provides some margin of safety and cushion on the downside.
Okay, all right, Mahesh. We'll leave it on that note. Thank you very much for joining in. Appreciate you being with us. And giving us your views on the market, a market which, as Sonia also pointed out earlier, we've kind of sort of given up some of the day's gains. We slipped into the red for a little bit, but the buyers are not absent. They're announcing that, hey, guys, we're still around, and the buyers have ensured that we get some green, at least, back on the screen for now. The next theme that we're going to focus on is, of course, all of this damage that we've seen in northern India. Incessant rainfall in several parts of the country, especially in the northern belt, have resulted in loss of life as well as property, as well as disruption in transport. Property estimated to be worth over 750 crore rupees may have been destroyed in Himachal Pradesh alone. Even areas near the Yamuna have been evacuated as water levels have been rising in the outskirts of Delhi. We now have with us Vinod Sharma, chairman of the FICCI Committee on Disaster Management, and I think we also have Mr. Lalit Agrawal joining in, the founder and MD of V-Mart Retail. Gentlemen, good morning. Thanks for joining in. I want to actually start by getting an estimation at an industry level, the industry body level. So, Mr. Sharma, if you could give us your sense on if you've been able to sort of compute any numbers or any rough estimates on the kind of business impact that this is happening, that this is having, production impact, production loss as well. So of course, I mean, it is the loss of life that's paramount on mind, but also trying to just get a sense of how badly businesses in the region have been hit.
No, you rightly said that natural disasters, they affect everything. They affect agriculture, they affect normal life, and floods and droughts are our common problem in the country. And every year, I think more than 2% of GDP we lose because of natural disasters. 3% we lose, in road accidents. But I think a very big loss every year we are having because of natural calamities. And this time, it is a record of 41 years. And we are seeing widespread rain in North India. I think the impact you are seeing, not only the number of people died, but industries are badly affected. And let me tell you that industry is affected because manpower, it need manpower, it need electricity, it need, infrastructure. and everything is affected. That's why the productivity is very, very less. And the most important, most crucial thing is the business continuity, the supply chain, which is broken because all these big industries, they are having so many ancillary units. And in case even one is affected, I remember that in 2010, 11, 12, when
Right.
there was a flood in Thailand, we have seen the Japan automobile industry was badly affected. So same thing
Yes.
is in India. So FICCI has done, FICCI is having a
Yeah.
committee, and not only committee, we are conducting programs, for the industry on chemical industrial disasters. And we are keeping all these important things in mind, particularly the vulnerability of the place. I think
Right.
the India's vulnerability for natural disaster is known. We have vulnerability atlas. We should know that which area is more flood prone. 11.2% area is having riverine flood in this country. So I think the industries, we should be educated how much loss is there from this natural
No,
calamity.
Mr. Sharma, sir, sorry to come in over there. Your points are well taken. But I'm just trying to also understand whether right now there has been any estimation, I mean, any rough range where, what is the aggregate loss? Or even if you can tell us which are the specific industries. I mean, Himachal, for instance, we all know that it's a major hub for chemicals and pharmaceuticals. So at an industry level, at FICCI level, do you have any feedback coming in over the last couple of days in terms of which sectors have been more severely impacted, supply chains, and any estimation of the losses?
In fact, all sectors, and particularly automobile sector, because Haryana is also affected, Himachal is affected, UP is affected. So I think the supply chain is disturbed. We are calculating that how much loss is there. I cannot give you the rough estimate, but the 750 crore which we are talking about Himachal only, I think in case you see the complete North India, I think more than 200 crore or 300 crore, loss. I'm not calculating the productivity, how much productivity loss will be there, but I think in case roughly we calculate, the figures are coming that all these states are affected very badly, and the real figures will be coming soon.
Okay. All right. Thanks for those inputs, Mr. Sharma. Request you to just stay with us. We are also welcoming Mr. Lalit Agarwal, the founder and MD of V-Mart Retail, who joins us on the show. Good morning, Mr. Agarwal, and hope your team, your family, all of you all are safe because, you all are in North India. I'm not sure which part, but you all have exposure business-wise as well. So could you tell us if your operations have been affected by this floods, and if you could give us initial feedback on ground?
Good morning. We are particularly very, very safe and very fine. I think it is definitely affected a lot of people. It is a little abrupt and little intensity-wise, little higher amount of rainfall which has come in for a particular time. But it was also a weekend, which is almost higher peak sales for a retailer. But I think it was not that bad in Gurgaon and Delhi. It was bad, but it was not that bad. But yeah, it did affect a lot in Himachal and Punjab and Chandigarh and even Jammu and Kashmir. So I think in these areas, it is definitely affected the livelihood of people. It is also affecting their crops.
Mr. Agarwal, yeah, right. Mr. Agarwal, from your business perspective, what kind of impact has it had?
I think we saw the footfall getting dropped. Definitely, the business is on those days when the monsoon is at its peak. It definitely affects the footfalls and it affects the sale. But this time, the impact is going to continue, and it has continued even after the rains have stopped. But yeah, so the impact is continued till now, and we see the impact also futuristically going and continuing for next 15 to 20 days. So that's what we are expecting, and I think there will be some impact. There will be definitely both because largely our customers are mass customers who are dependent on farm income as well as their regular. Day employment is also very important. So I think there is an effect on people's livelihood and their convenience, their mobility, all are getting affected.
Oh, absolutely. And it's so unfortunate, right? Day after day, we see stories about how people are getting affected in a big way across the board. But Mr. Agarwal, just wanted to, take Nigel's point forward and drill it down. Can you share any specifics with us in terms of numbers? Can you quantify for us what the impact has been? Any damage to your stores or your inventories in the affected areas? And any kind of losses that you've had to incur? And are those losses covered in any way?
We are fully insured and we are all covered. But anyway, we have kept all our safety intact. So we have not incurred any loss, and there is no loss to our property or our fixed assets or our inventory. But definitely it's a loss on sales. And then we have seen almost a drop of almost 70% of footfalls and the sales on the weekends. And then that's how it gets impacted. And even in the continuing week, we are seeing almost a 40% drop in the sales in those particular regions and those particular geographies.
Okay, so that is pretty grave, right? A 40% and 70% drop in footfalls, but I guess that would be expected. What do you think the impact would be on the supply chain situation for the industry, not just for you? And what are the other damages, the ramifications that this would have on business in general for the industry, apart from, a drop in footfalls?
Definitely, it has disturbed 2, 3, 4 days of operations in certain parts, but in other parts, it has impacted maybe a 1 week or a 10-day supply chain processes. And then definitely, even our trucks are not reaching the stores, and they are stuck in the middle, and they can't reach the store. So there is definitely a problem in the overall logistic area and then the road transportation. And I think even the labors are not getting reported in the factories, because we've got a lot of suppliers also in these areas who are right now not able to fulfill or send the inventory also, because the labors have also not reported back into the factories and the warehouses. So there is definitely some disturbance which is happening. And the labors also, most of the labors come from villages, and they are going back to the villages. They want to check out their families. So some of those pieces are also happening. But I think it should get repaired within next week or fortnight. That's what I expect.
Okay. I guess if there's one thing we Indians know very well, it's resilience. We always bounce back, and I'm very sure that even from this crisis, we will. And our thoughts and prayers with everybody in northern India. So, gentlemen, let's sort of end on a slightly different note. Mr. Agrawal, can you give us a sense of the business X of this event? This obviously has been a very difficult one. It will take perhaps, I'm not sure. Actually, you tell us. Will it once the rain situation abates? Are you expecting normalcy? Instantly, because you're saying your inventory hasn't been impacted, your stores haven't been impacted. So if the bounce back is very quick, then what is your outlook for the full year? What is the kind of growth in business that you anticipate, irrespective of the situation?
We definitely have reported our numbers on the top line in this quarter, where we are seeing 12 to 13% of growth coming in, and we expect that to go up, because we are expecting more customers, because the second quarter normally is a weak quarter, but the third quarter onwards we see the onset of festivals, as well as the onset of the winter season. And maybe because of the huge rain, the winter season will get a little more preponed. The summer season will end up a little early, so there could be a little difficulty in forecasting what will sell and how will you sell those. Are you able to manage those seasonal requirements? So some of those pieces will happen, but largely we believe the growth is supposed to come in the third quarter largely, and then that's what we are expecting. And this time, because if the rains are good, farm income is going to be good, and that's how the people will have more money in their pocket to spend. And then
okay, all right. Well, hopefully things should improve, right? The damage has been quite disturbing up until now. And as you said, it's impacted retail in a big way. So hopefully things will get better. Mr. Sharma and Mr. Agarwal, thank you so much for joining us. Appreciate your thoughts. Let's step into a quick break. The market is still quiet, not too much happening. So we will put focus on the FMCG segment in our special segment, Quarter Se Quarter Tak. And to discuss more on this, we will connect with Abneesh Roy, the Executive Director at Nuvama Institutional Equities. Later, we'll be joined by Nitin Sood, the CFO of PVR Inox.
Welcome back. Well, it is time for our special segment, Quarters Se Quarters Tak. Today, we are talking about the FMCG space, and Manglam is standing by to take us through all of the expectations. Manglam.
Well, so let's set the stage then by presenting the overall expectations for the FMCG sector in Q1 FY24. We anticipate the return of volume growth. That will be the headline this time around, with mid-single digits volume growth projected for the entire industry. As the demand environment gradually recovers, we foresee a favorable scenario with regards to demand. Furthermore, the cooling off of inflation is expected to aid gross margins. Interestingly, companies are reinvesting their gross margin savings into advertising expenditures and price cuts to spur demand as well. Although summer products were impacted by unseasonal rains and moderate summer in the northern part of the country, the healthcare portfolio did see a massive, impressive growth as well on a favorable base and coming off the heavy COVID-related impacts as well. But shining the brightest in the FMCG landscape is the jewelry segment. We've seen 21% growth come for Titan and 34% for Kalyan as well. These companies hold a high hopes of recovery in the second half of this fiscal year post the monsoons. However, El Nino could be a bit of a risk. So let's talk about the updates that we've got so far for the first quarter. In the FMCG pack, we'll have DMart, which is about 18% revenue growth. Along with that, we've had Godrej Consumer as well, witness an expansion of their gross margins by about 800 to 1,000 points. Also, Marico, on the other hand, experienced a decline in their consolidated revenue, but their net profit has grown in double digits, whereas Dabur boasted a consolidated revenue growth of over 10%, but out there as well, net profit has been impacted. Titan, well, recorded a 21% jewelry growth in their jewelry business, whereas Kalyan as well, a prominent player in the Indian market, achieved an impressive growth of 34% in the Indian business itself. Now, in terms of what is expected in terms of margin expansion, for that you have to see how the raw material prices have declined as well. Palm oil has seen a 43% decline, palm fatty acid around 44%, copra itself has seen a 5% decline, Brent and Mentha, important marks, have seen a decline anywhere between 6 to 30% over last year. So as a result of which, we will see margin expansion for all the FMCG companies. What is it that the street is expecting in terms of revenue and EBITDA expansion from all the FMCG companies? Let's look at the next list, which comes in what we're expecting in terms of growth for HUL, 8 to 9%, Britannia 10 to 12%, Asian Paints 6 to 8%. All these companies are likely to post their EBITDA growth higher than their revenue growth itself. 18 to 20% is the EBITDA growth that we're expecting for Asian Paints. Look at the other set of the companies as well that we have. We have Tata Consumer likely to show extremely strong revenue growth. We have, some other companies. Nestle is likely to lead the pack with an impressive growth of over 15 to 16% in the company's revenue, and we will see growth in Nestle's EBITDA as well. Going forward, let's keep an eye out on a bunch of other things that we'll be watching out for. For ITC in particular, we anticipate cigarette volume growth ranging anywhere between 9 to 10 odd percent, and the street would eagerly await their commentary on the business structure of the company, as it holds significant implications for their future endeavors as well. Also, in terms of outperformers, don't lose sight of the smaller players, Bajaj Consumer and Jyoti Lab. For the last couple of quarters, they've been doing extremely well. And in terms of impact coming in from the summer products business, watch out for Imami as well as, Varun Beverages, because they may see a bit of a demand decline on account of, the unseasonal rains that we saw. Let's watch out for valuations then for the FMCG pack. They've never been cheap, and now they've not been cheaper either. In fact, ITC is trading above historic valuations, as is HUL, Nestle and Godrej Consumer. And a lot of the stocks are trading at fresh record highs, so that implies fresh record valuations as well.
All right, thanks a lot for that. Well, Avnish Roy, the Executive Director at Nuvama Institutional Equities, joins us now to talk about what to expect. In fact, they have released a note where they talk about how their coverage universe revenues will grow just 5% in Q4 of this quarter, compared to 9.5% that their coverage universe has grown in Q4 of FY23. So there's definitely a slowdown on the top line. Avnish, tell us a little bit about that. What are the key expectations this time around, both on the revenue front as well as margins? And where do you see the outperformance coming from in terms of individual stocks?
Sure, thanks. Firstly, on your question of the slowdown, I don't think it's a slowdown. See, revenue growth this time is looking optically more than the Q4 YOY growth because of two reasons. In ITC's case, because of the agri base being very high, there will be almost 40-50% dip in the agri business for ITC on YOY basis. Wheat exports was allowed last year. Currently, it is not allowed. So that is impacting the overall sector because ITC is a behemoth. Second is there are price cuts in soaps, detergent. So those are obviously also now anniversarizing. But if you see in terms of a volume growth, clearly things are turning a bit more positive because of two reasons. One is on the rural side, if you see Nielsen data also, now no category seems to be kind of declining in the rural India, which was not the case in the first half last year when a lot of categories were seeing -5 to -9% kind of volume in terms of the rural demand. So that's positive. Second, of course, is companies are also giving back to the customer in terms of grammage addition and promotion. So that's also helping in terms of volume growth. If I see category-wise, food companies clearly doing better. Biscuits and noodles, for example, we have been calling out that they are gaining from the unorganized competition because of very high inflation in the unorganized part, while you get a biscuit and a noodle at a 5 rupee, 7 rupee kind of a pricing. So that is clearly helping them. Apart from that, we are also seeing that rest of the segments also the healthy growth is coming back, partly because of base effect. Definitely health and immunity portfolio seeing good recovery. We expect almost 8 to 10%, 11% growth in this part of portfolio for Dabur and Imami. Yes, the only weakness will be essentially in terms of the cooling and all those summer related portfolio in terms of cooling hair oil, talcum powder, beverages, ice creams. But those will be for a few companies only. Dabur, for example, in spite of weakness in this part of the beverage portfolio, will see a healthy double-digit kind of a sales growth because international also is doing really well. International business should do well for most of the companies, faster than the domestic growth.
Amnish, hi, morning. So, okay, let me make it really, really simple because the trends are going to be complex. I think even the quarterly updates have told us that Marico is, far more conservative and sounding a lot more somber on rural growth than, let's say, Dabur. So tell us this, in terms of the stocks under your coverage, which are the one or two which you think will post perhaps best-in-class earnings and where we may even see positive surprises?
Sure. So what is emerging here is wherever there has been a sharp deflation, for example, copra and edible oil, there has been a very sharp deflation. There is a regional competition which is coming back and companies have also seen negative pricing which impacts the operating leverage. That's why Marico, Adani Wilmar kind of companies are seeing that challenge. In terms of companies which will outperform, clearly Godrej Consumer, Britannia, these are two companies which we expect strong numbers. Nestle also should be good. Dabur and HUL are kind of mid-tier, ITC also mid-tier, and Bajaj Consumer, as Mangalam also highlighted, that is one company in the small cap space which is really now finally coming back in terms of good double-digit EBITDA growth, good margin expansion, and good growth in the volumes also for Bajaj Consumer. So those would be the outperformers. In terms of underperformers, yes, Marico, Imami, and United Spirits, those will be in the lower tier in terms of various reasons, either because of deflation in their pricing in terms of the key products, or in terms of the summer demand, or United Spirits has sold off the part of the asset. But for United Spirits also, P&A should see almost 19 to 20% kind of a sales growth and almost 9 to 10% volume growth.
All right. And what about the recent hike that we saw in the Karnataka budget? What kind of impact will it have on United Spirits?
Sure. So it will have some impact. Essentially, what is happening is because of the freebies, every state government is announcing in the run-up to elections and post they come to power. This is a key overhang which liquor industry will see this year because now Madhya Pradesh, Chhattisgarh, Rajasthan will also be there. Coming back to Karnataka, the hike seems to be quite sharp, 20% in the spirits and 10% in the beer. But for United Spirits, we need to see on the BIO and BII what's happening because that's imported. So that may or may not see too much of an impact. But on the overall industry, if I see for the domestic IMFL, there will be a negative volume impact because this is sharp pricing. And Karnataka government needs 52,000 crore for the subsidies which they have announced. And my sense is the other state elections also will see a similar kind of a strategy by the political party. So this remains an overhang. Going ahead, United Spirits margins will improve, gross and EBITDA margins gradually. But in Q1, you will see gross margins remaining under not much of a improvement, while other consumer companies are seeing good improvement in gross margins.
Also in your report, you write how United Spirits has sort of underperformed in the last 4 years, if you look at it, right? Is it largely, do you think this underperformance is something that will continue over the next couple of years with its peers, or do you think at some point things could change?
No, things are changing under the new MD. Clearly, we are seeing a lot of proactive action, a lot of new brands, a lot of higher aggression on the activation part, much better branding. So that's on the positive side. When you see the reported numbers in our report, that's getting impacted because company has sold around 11% of its portfolio, which is the lower end. So that is just because of that. If you see in the core part of the business, United Spirits in the past few quarters is doing really well. P&A, we are seeing double-digit 20%, 25% of YOY growth. Of course, the base was impacted to an extent by COVID, and then in the base, PIO also was impacted. So those are helping. But overall, under the current MD, we are seeing definitely good recovery in terms of market share also versus a Pernod. There was initially Pernod in the last 3-4 years has done better, but now under the new leadership, it seems that United Spirits is getting back market share. Radico also doing well, but I would say that these 2-3 players are the ones who will really see the gains. But definitely this year, because of the tax hikes, there is a impact on pricing, and volumes will also be impacted whenever that sharp price hike happens.
Okay, all right. Abneesh, thanks a lot for joining in. Appreciate your thoughts. We'll continue this discussion on the entire consumption space. There's an update that has come in what seems to be a surprise for multiplexes. The GST Council has reduced the tax on food and beverages that is sold at cinema halls to 5% from 18%. This comes after the Multiplex Association of India sought a reduction in the tax amidst confusion fueled by reports of cinema halls getting notices over the GST they were charging. But now it seems that companies like PVR were never really charging 18%. It was always at 5%. So there may not be too much of a relief for them. But to discuss this and more, we're joined by Nitin Sood, the CFO of PVR Inox. Nitin, thanks a lot for joining in. Were you ever charging, under that 18% slab rate before this? And is there any impact because of what has been announced?
Yeah, so let me clarify. I think there seems to be confusion on the matter. The cinema industry, which is approximately 9,000 screens across the country, post-introduction of GST, were always charging a 5% GST rate, which was introduced when the concept of restaurant service was introduced, without availment of input tax credit. But over the last 12-18 months, I think several of our members had received notices from various parts of the country, from different jurisdictions, GST authorities, claiming that a higher rate of tax should be levied. And the industry had gone and made a representation to the council to clarify on this matter. And we're very happy that the government and the council has issued a clarification saying that sale of food and beverages in cinema halls will continue to be taxed at 5%.
Okay. All right. Hi, Nitin. Good morning. So, status quo. So good news from the PVR perspective. And, that's why I think the stock is seeing a bit of a relief. I just want to clarify on one point. When you book your tickets, depending on the price of ticket, either it attracts 12% or 18% GST. Now, if you book your snack as well with it, with your ticket, then the GST will be applied, will be 12 or 18%, is it? Or will it still be 5%? Is there some kind of a bifurcation?
No, it will continue to be 5%.
Okay.
You will pay tax on cinema tickets at the slab of 12 and
Separately.
18%, and separately, and you will pay the tax of on F&B at 5%. What I think the GST Council has clarified is that if the consumer does not have an option to choose whether he has to buy F&B, and it is a composite supply, which means I think cinemas club and sell both of them compulsorily together, then whatever is the highest marginal rate will get applied. To the best of my knowledge, this practice is not followed by cinemas across the country. So this is a mere clarification that they've issued.
Oh, that's good news. That's good news then. Otherwise, when I'm booking my ticket, I rather not book my snack. Otherwise, I'll be paying 12 to 18% for a snack. Otherwise, when I go to the counter, it'll be 5%. So.
Don't you think it's more fun
just
when
to
you go to the
clarify,
counter
you can
and
continue to book your snack. It will continue to be taxed at 5%.
Only 5%.
Yeah, absolutely. That's good clarification that's coming in. Then Sonia is already, licking her lips. She's saying she's looking forward to her next visit to.
No, I never pre-book my snacks. I always go and I choose my snacks on the counter depending
I'm in
on
that
what I
camp. Yeah, I kind of like the whole idea of just heading to the counter and then sort of parsing through and then deciding what you want to have. But anyway, Nitin, since we're on the subject of F&B, You folks have also been trying to sort of push F&B even through some of the delivery apps. As in looking at home delivery of this. I wanted to ask you this even earlier, so glad we're having this conversation. What's the thought? Because these days, even if you open up, let's say, your Swiggy or Zomato, sometimes you get these options, or even if you go to the cinemas, you'll see that you can get a lot of these snacks at home even when you don't come to the cinema. So at a more fundamental thought level, what's the strategy over here? Are you really looking to increase the revenue, F&B revenue? Is it working out? What are your expectations over the next couple of months, if that indeed is the plan? And more importantly, will this be then taxed at 5% or some other rate? Because the consumption is not happening in the cinema.
Sure. So first of all, on the tax bit, I think everything that we sell in cinemas on F&B front will be taxed at 5%. The government had issued similar clarification, for various other similar services like home delivery, cloud kitchens, railways, airlines, etc. So everything that we sell in cinemas on F&B will be taxed at 5%. Our big focus on F&B is to, capitalize and increase the offering that we have in cinemas, including, we now have live kitchens in a lot of our cinemas. We understand our consumers, experience the best of food when they go for dine-in options outside. And we want to, ensure that we offer same quality of food and beverage in the cinemas. It's a 3.5 hour activity. People are stressed for time. So a lot of work is going on that front, including, take-home products, which you don't want to consume, but you want to take home. Home delivery is a very big aspect. We are working on creating niche products that you can order for home delivery, even when you're snacking at home, watching a TV show or something. So that's all work in progress. Cinema average F&B spent. Yeah.
Sorry. Carry on.
So cinema average F&B spend today is approximately 50 to 52% of average spending on a ticket by a consumer. And, there is no reason this number should not be higher. In Western countries, we've seen this ratio as high as 70, 75% as well. And that's the aim, that over the next few years, we increase, the overall F&B consumption at cinemas.
So at cinemas is fine, but now I'm trying to understand this as a percentage of revenue for you. Because you said there's a lot of work going on, even, at home consumption, why not have the same food experience even when you're watching a movie, say, at home? So what is the kind of investment, if any, that you'll have to put in additional, investment to grow the F&B part of the business? And then overall, as a percentage of your revenue pie, now whether it is home consumption or consumption at cinema or take away from the cinema for home, whatever way you do it, what part of your revenue pie you think F&B can grow to, say, over the next year or so?
Yeah, currently that number is very small. At least I think we want 5 to 10% of the overall contribution to come from these add-ons, including home delivery, takeaway, and some of the new stuff that we are doing. So it's very early days for us, but we believe there's a big potential. The combined circuit, we sell about 16 to 17 crore tickets annually. We've got a very loyal base of consumers who comes back and they want to experience. There's a big opportunity to, sell this F&B outside of cinemas as well.
Okay, and I recently went to the theatres and I must say that, the food, the service, the quality, everything has picked up in a big way. And of course, the box office collections have picked up as well. And there's so many new movie releases. There's Mission Impossible Dead Reckoning that's coming soon. So everyone, I think, is waiting for that. But tell us, leave us with one number. How have the box office collections been so far in this quarter and what's the expectation?
Yeah, I think as you rightly said, things are progressively getting better. Last 3 quarters for cinema industry have been fairly low. I think the Hindi and Hollywood film industry was struggling last year. There were not enough film releases. Luckily, what we are seeing is Hollywood is bouncing back in a very strong way this year. The number of film releases has improved quite significantly, and there is a regular flow of content. That's shaping up. The regional film industry is doing really well. We had 2 big films, Carry On Jatta and Bappan Bihari in Marathi, which have again record-breaking collections, which means consumers are keen to come back as soon as they're good films. I think Hindi is continued to see some bit of gaps in releases. While Hindi films have done well, What we are still seeing is in the last quarter or so, you have a film and then you don't have anything for 2 to 3 weeks. I think as progressively we go down to the next quarter and,
Yes.
end of July, we are seeing that the film releases are becoming more closer to each other and the gaps are reducing. So hopefully,
Right.
the box office should come back strongly in Q2 and Q3.
Okay, all right, Nitin. Thanks so much for stopping by and giving us clarity on, the changes or no changes on the GST front and giving us a couple of ideas in terms of how we should book our snack as well. For the time being, though, we'll slip into a short break. Come back, Mitesh Thakkar will tell us how to approach the markets. Welcome back. Well, the markets are trading mildly in the green, but we have come off considerably from the highs that we saw earlier today. So that 19,500 odd mark still remains elusive for now. Mitesh Thakkar is back with us. Mitesh, how do you approach the index? Well, it's been a fairly decent morning session. How do you approach trade, as well as give us a couple of picks?
I think on the index, I'm still waiting for 530, 540 to take a test down. While we will remain overbought, I think getting past the earlier highs means I think on its chances of momentum burst, and therefore once you get past 540, take away tight stoppers of about 25-50 points. These are spot between the Nifty levels I'm talking about. And about 540, expect 19,700 as the near-term target. So I think we will wait for the breakout happen. Otherwise, I think this could go just sideways. I think therefore you want to buy this support level, which is close to 93 zones. On the stock side, I have one buy and one sell. Granules is something which I like on the buy side. I would recommend buying here. You can stop at about levels of 308 and a target of around 326 on the upside. And on the sell side, it's Cofort, which is the latest figure today. So that's a sell to stop at 4670 for targets of 45.
Okay, thanks a lot for that, Mitesh. Appreciate your thoughts. Let's go across to Vivek now. He's tracking IndusInd Bank this morning. Vivek, why are you looking at it?
Well, IndusInd Bank, last evening the company updated its latest shareholding pattern, and this is for the end of June 2023, the quarter ended June. Now, the foreign headroom available, as per the calculation, comes to around 13.5% at the end of the June quarter. That is, the headroom available for FPIs to go ahead and increase their stake. Now, at the end of the March quarter, the FPI headroom was 14.19%. Now, why are we looking at the foreign headroom as far as the IndusInd Bank shareholding is concerned? Was the fact that, if the company had a foreign headroom of 15% or above, there was a likelihood that the company could have entered into the MSCI Standard Index, and this was a low probability inclusion. However, what IIFL research says is that because of the fact that the foreign headroom now available is less than 15%, the likelihood of IndusInd Bank coming into the MSCI Standard Index at this point of time is negligible. Now, another important factor to consider as far as IndusInd is concerned is that the promoters themselves have actually indicated their intention to go ahead and increase their stake up to 26%. One thing to note is that in IndusInd Bank, the promoters are actually classified as FPIs. So in case they go ahead and increase their percentage stake up to 26%, then definitely the likelihood of the stock going into the MSCI Standard Index is negligible. So on the back of that, some pressure today, but this is something largely along expected lines.
Okay, thanks a lot, Vivek, for that. Well, Nazara and Delta Corp are also in focus. So, of course, we had a chance to, get some more details on Nazara. And since then, the stock has, it's still down about 5-6%. But let's get Mangalam on board to tell us more about that. Mangalam?
Well, what exactly has happened is that the GST Council has really hit out at a bunch of businesses. Casino, horse racing and online gaming are these businesses where they will now be taxed at a uniform rate at 28%. And the street was worried about that. In fact, for casinos, the problem is that the tax will be applicable on the face value of the chips purchased. And if that were to happen, then the initial inhibition that people would have to spend 28% higher than the face value of chips that they wish to purchase would reduce their volumes. At the same time, for online gaming as well, there would be tax applicable on the full value of bets in case of online gaming. However, analysts believe that tax on the face value of chips purchased may impact chip sales volumes at entry itself for players like Delta, and tax on full value of bets placed in case of online gaming may treat the game of skill as at par with a game of chance, and that's not particularly good. And which is what we're seeing in terms of a decline for the prices of Delta Corp and Nazara. However, Nazara on its part has said that real money gaming accounts for just about 5% of its revenues, and their impact or the impact that they have because of this would be minimal on their overall business. The street believes that from a long-term standpoint, this could have some sort of impact which is structural in nature.
Okay, thanks a lot, Mangalam, for that. Let's slip into a quick break. On the other side of the break, our special segment, Indianomics, where Lata will get chatting with former Agricultural Prices Commission Chairman and now Professor at ICRIER, and Ashok Gulati, and Harish Damodaran, the Agriculture Editor at the Indian Express, about the state of India's farm output this year.
Welcome to Indianomics. Tomatoes have dominated headlines till the rain floods edged them out. India's agriculture and hence her food inflation has been caught between excess rains in 6 important food grain growing areas of Punjab, Haryana and Western Uttar Pradesh, while 15 other rice growing subdivisions like Andhra, Rayala, Telangana, Karnataka and West Bengal are reeling under deficient rains. And they may suffer more due to El Nino fears. Not surprisingly, the usual seasonal tomato inflation has spilled over into cereals as well. Rice and wheat have jumped 1.3% in June over May, according to the Ministry of Consumer Affairs, while dals have jumped 6% in June over May. Potatoes and onions are up 4 to 6%, while tomatoes are up over 100% or 50%, depending on where you're shopping. Can this get corrected as this season advances? How crucial are the July and August rains for the overall Kharif output? And are stocks enough to contain prices? For all these questions, I'm joined by 2 experts, former Agricultural Prices Commission Chairman and now Distinguished Professor at ICRIER, Dr. Ashok Gulati, and Harish Damodharan, Editor, Rural Affairs at the Indian Express. Gentlemen, thank you very much for your time. Dr. Gulati, what is your sense? Since we have deficit rains plaguing some agriculturally important states in the south and floods, bedeviling some of the northern food-heavy states, is the overall Kharif output in danger?
Well, I would say that climate is knocking at our doors very loudly. The erratic behavior of rains, too much excess at one place and still deficient in other places, is not a very good omen for agriculture. There would be some losses, and as we look at the data, we still find sowing in some parts of the country, especially for rice, is lagging behind last year. So there would be some damage to agriculture overall production. How much? We have still to wait and watch what happens in the rest of July and August, which are the critical months. And if the spread is better, just 15 days back, we were worrying how much is the big deficiency. But yes. By 10th of July, the overall rainfall is in surplus at all India level by 2%.
Yes.
But the spread is very uneven, and that's not very good for agriculture. But how much damage will be there? I think we have still to wait and watch.
Okay. So you've been traveling globally rather extensively. What are the El Nino fears? I'll come to the flood. It may look a little odd as our viewers are grappling with floods. I'm asking you about deficient rains. But how serious is the El Nino worry? Will the South be severely affected in terms of the rice crop?
The latest 4th of July report of the World Meteorological Organization of the UN has updated that El Nino is on us. 90% probability, and July, August, September, the warming of the Pacific Ocean will be in an accelerated fashion. So that is not a good sign for the Indian monsoon. We analyzed last 72 years data since 1950 to 2022, and we found there were 15 years when there was drought. Out of that, 11 were El Nino years. But there were 4 others when El Nino was,
countered.
El Nino not necessarily lead to drought. It can be a normal rainfall. And in one of the years, so even when El Nino was there was more than normal rainfall.
Okay.
So, but the larger probability is that it will damage the rainfall pattern. And therefore, dangerous.
Okay, I'm coming to that again with you in terms of how crucial and which months are crucial. But Harish, you've been traveling extensively domestically, and Dr. Gulati alluded to the fact that rice crop sown area is 24% below what it was last year. how worrying is the net sown area numbers, not just for rice, but for everything, even pulses?
Yeah, in the case of rice, I think these rains definitely is going to benefit the crop in Punjab, Haryana, or even the Tarai region where I was last week. So I think you're going to see very good transplanting, etc. in Punjab, Haryana, and these are very high yielding states, of course. But on the other hand, we've had hardly any rains in Telangana, in Andhra Pradesh, in West Bengal, in Orissa, even in Chhattisgarh, Bihar, Jharkhand. So I don't know to what extent the lack of rains there will be offset by very good rains in Punjab and Haryana. Where you forget about all this flooding in cities and all. These rains are excellent for paddy and just at the right time. I mean, at the time of flooded situations flooded fields are very good at this time, at least for paddy, though not for people in cities.
I would assume the crop hasn't been sown there yet, and therefore you can take advantage of the flooding henceforth? Because they look like they were washing away fields.
No. I don't think there's been much washing away of fields, etc. Maybe in some areas, where very low-lying areas kind of a thing. But overall, I think in Punjab and Haryana, there's been. I think the transplanting will be very good, and I think the crop should be very good. I think Punjab and all have to worry more about cotton, right? Because,
it's good to hear that rice crop over there is more likely to be good, and perhaps the washing away of floods was more in Uttarakhand. I mean, one can't say the picture from another. It may not be in the rice growing area. You're right.
Yeah. I think it was more in Himachal Pradesh.
Yes.
And even Uttarakhand, I don't think in the Tarai, etc. At least I was there till last Saturday. I mean, there sort of transplanting was going on in full swing.
Yeah. So Western UP is still being counted as just excess and not large excess. By the ministry.
Same thing I would say in pulses. The rains have been very bad in Marathwada, Vidarbha, in Telangana, in northern Karnataka, which is the real Arhar bowl of India. Okay. Whereas, but you had excellent rains in Rajasthan, so you will have a bumper, I think, moong crop. In
Rajasthan.
Yeah, Rajasthan. So Rajasthan has had very good rain. So you will have very good bajra crop. We'll have a very good moong crop,
Okay.
And I think so you have these offsetting kind of scenarios, Okay. So Punjab and Haryana offsetting other rice growing states, Rajasthan offsetting maybe Karnataka and Maharashtra.
Dr. Gulati, can things be made up? Can things pan out, as Harish is saying, that rice and pulses of the north will be able to counter the deficiency of the south?
It's for me too early to predict on this part. You look at by 10th of July.
Okay.
That's literally
about 20% of the season.
Yesterday, Jharkhand is 41% deficient in rain.
Yes, sir.
Bihar is deficient in rain. Telangana is 36% deficient in rain. Odisha is 27% deficient in rain. And these are all rice growing states.
Yes.
So how much they will be able to recover depends upon the coming weeks, how the rainfall fans out. And if the rainfall is good, the recovery will be much faster.
Okay.
But I agree with Harish one point that rice being a water-loving crop, there will be, something good in terms of recharging the groundwater of Punjab, Haryana, and Western UP, which had been depleting over years like anything. Yeah. I'm still not clear whether the productivity in Punjab can be increased by these floods or in Western UP because they are 100% irrigated crops in any case. So whether these floods will improve the productivity in Punjab or Haryana, I have my doubts. Okay, but the loss of this sowing area in other states that I counted is going to be impacted. Good thing is that there are enough buffer stocks of rice as on today. If we don't throw away more of doles in the election run-up, I think we are reasonably safe on rice front. So that's not a big worry for me on the food security.
Okay.
Pulses, pulses prices can spike. And Harish mentioned about Maharashtra tour to be watched. And in between, excess rains disturb the flow of the goods, and veggies are already on fire. And you're going to have it a little tough time in the next 2-3 weeks till the time all the supply lines are fixed.
Okay.
Back to you.
Dr. Gulati, let me ask you about overall inflation. You've worn many hats, even been in the RBI's board. So do you think this mix of vegetable inflation and fears of cereal inflation, for the moment, dals are 6% more expensive month on month in June over May, according to the Consumer Affairs data. Do you think we are in danger of a generally higher inflation for some months?
I would say there could be some corrections on the cereal front. Let's talk the big items first. The cereal inflation, which was bothering the RBI and the country. There have been some open market operations by FCI unloading. So wheat price inflation particularly could be coming under control. Rice, there are not many takers in the open market. So I think cereal price inflation for the next 2-3 months, I'm not too worried.
Okay.
I'm worried about vegetable prices and some of the pulses, given this climate problem and floods and droughts simultaneously existing, excess rains and large deficiencies in certain pockets. Some of the pulses, especially tuor, can flare up. But no one is talking about what is already on our table, and that is the milk inflation, which has of all the commodities, 299 commodities in the CPI basket. Milk has the highest weight. And if you look at the contribution to CPI inflation right now, till last month, milk was contributing the maximum.
Dr. Gulati, I need to take a break. Do stay on. I'll have more questions for you, especially on whether global prices can soothe Indian prices through imports. Those questions after the break. But for Bazaar viewers, it will be chartbusters. You will get to hear the entire show later on after market hours.